General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Let's do the work. Options expiry week, Wednesday. Today definitely expansion. It's an engaged day. Low because of really it's FOMC. So let's get this anchor one at a time. So this Wednesday, hold on, Control Z, I'll move something. This could be the anchor here for the week. I'll lock this. It'll be suspected. Even though this is low resistance liquidity run, we only need one headline to go back up here. But for the sake being, tomorrow could be maybe a leg lower, clean up something else. You know, if we do get a retracement, then that sets up for an expansion. So it's a good chance this Wednesday high safe. And if you wait to the end of the week, be like, all right, everything's already laid out. It hit everything it needed to hit in my eyes. Let's go. Nasdaq. So M15. This was New York, London reversal. Man, London people, they got the best part of the whole delivery. Alright, let's hit objective. Why did it melt like that? It's like order pairing. Let's look at the H1. Kind of stalled at that gap, but then just kept going down. Previous month slow is down here, and we're back in this old gap. Large range day. Could chop tomorrow. Tomorrow, be on guard. It's like, I guess now we just waiting what they say. Or Van said, about 24 to 48 hours. Something with oil. Closing below this just deletes everything bullish, but it's 200 bounce. We can do it again. I still like this as a cool low. I think the only thing that's interesting as far as liquidity is November low. Dressing lines we already kind of dealt with. Up for what? But I could see it's going up just because of that 200. It's just water sitting there. People are looking at their stocks, or they may have forgot about something. Like, oh, Tesla's on the 200, I'm going to buy. Look how long since it's been right there. You might be like, I ran. But the market don't care. Let's get this link. If the market cared, it would have been way down. On the downside. So this 200, we ain't been in the 200 in a long time. Give us a good push to take out this buy side liquidity, then come down and go even lower. Sound frustrating, but that's what markets do, especially if everybody think they finna be safe right here. You get right here, now you FOMO, man, I should have got the 200, then come back down. Have a good push up. Then come fake out, buy, and target, sell side liquidity. Let's go here. Target for tomorrow. It's the easy one. This looks like it's retracing now. I would target here because it's a gap. Difference between here and here. Let me do it. No, I think this is it. Yeah. We got the same thing here, but we missed the target. All we did was get the gap. Price rejected the gap and sold off unexpectedly. By the time New York came around, the ADR was gone. The 5-day ADR. I'll be mad when the ADR be gone. That's trading. Every day ain't gonna be your kill zone. See how we came all the way back down? Use some old gap, just like a weekly gap too. Price revisiting. Low imbalances. Let's go here. This makes sense here, but November, let's make this yellow too. Look like we can kind of chill here. Same thing with the 200. Get the link. Same concept. And the Nasdaq, I think we could get a push off the 200. Just retail buying in. That could be the fake out. And we go lower to April. Yeah, I should do spies the third. Just do like maybe like the daily chart. Never came back to Monday's high. And we're almost to the 200 here. And we got gaps down here. We're basically there. What's that, $2? Next liquidity will be here. And we closed. Look like we closed below. Here would have look like we wicked it. Yeah. Put an arrow on there. Where's our next gap? We're moving like $9. Today we moved $9. What we have? 61. That's a lot of range. I think maybe half. Maybe fill this up and then bounce. 658. Get my target over here. Reaccumulate, maybe bounce. It'll be the fake out, and then push lower into next month. And then, after they're tired and exhausted, then we can start to move the market up. I'm gonna throw this on here. Just this one chart. Still have a bit lower. 200 on spot. My low hanging fruit objective would be 658. No, I'm expecting that sell. Wasn't expecting the sell at that time. Maybe FOMC. It was early. We just continuation. And damn. Hold on, what day was that? The 18th. Okay. It's perfect. Let's do this midweek. 3/18/26. Anchor point status. Let's go back here. Wednesday gonna hold. Weekly buys template. I think we go lower the rest of the week. I don't see any sign of Nasdaq slowing down yet. Simpson framework hit right. I think the price is getting better now. Price is getting better as we in the first quarter. Got that. Let's go here. We're in week 3. We still playing in the middle of week 2. Still in the middle of week 2. At EQ, we could consolidate here in order to really accumulate orders. We at least need previous week's low. We're accumulating that fair value. Accumulating that fair value. Expansion mitigation signals. Larger context. We are in the middle of a range inside of a wide consolidation range. Decision quality base hits are the high probability trades in this environment. Narrative framework accuracy, pretty good. 1% a day. Case study vault reference. No, not really. All right, that's that on that. Have a good day. Peace.